Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss what happens if the economy overheats and investors are faced with inflation. And Phil, if we take a look at what's happening with commodities, it's showing in the prices.
Yeah, that's one of the interesting things to look at today. I mean, the inflation print this morning was actually pretty benign, but underneath the hood, there is some signs of inflation, definitely in certain segments of the economy. And the commodity prices is one where it's clearly happening. You can see broad-based commodities kind of bounced at the bottom of the COVID sort of crisis and have been pretty positive ever since. And they're getting to the point now where they're starting to feed through into producer prices. We can see it ourselves when we're driving down the street. The prices at the pump have started to go up. That's tied to the price of oil that's now getting up close to $60 a barrel, way above the $20 a barrel back in the middle of sort of March, April last year. And obviously groceries, which were in high demand, spiked initially. And although this month they've kind of slowed down, the prices of food globally has actually been accelerating as well. So there's definitely pockets where prices are going up.
And let's take a look at the data with China. It's pretty interesting. It's not as reflective of the back to normal narrative.
Yeah, I mean, in reality, everyone thought China was probably driving the commodities boom because it got back to normal so quickly. It got people back to work. It was producing again. Obviously, it's a big global exporter, but some of the data coming out of China at the moment is seemingly showing some weakness. And today we're looking at a couple of inflation charts. And if you've got deflation in travel, that doesn't sound like the economy is booming. Their core CPI actually looks like it turned negative as well. So that doesn't tell the story of a really strong growth economy either, which obviously could sort of hold back the whole global growth story as well, or at least be signs that the global growth story is a bit softer than we think.
And with markets still hovering near all-time highs, what are markets telling us? I mean, this rally has been pretty remarkable.
Yeah, I mean, obviously, we're in the middle of earnings season, and one of the things that some people are highlighting is it's been a pretty good earnings season. Most of the analysts are revising numbers up. A lot of companies have beat earnings. If you look at a multi-decade sort of history, the number of analysts that have been revising data up is actually at a record. So earnings have been good, earnings revisions have been good, but also you've got the fact that the dividend yield on stocks is still way above the yield you can earn on a lot of bonds, including some of the longer term bonds. So, people searching for income are forced into high yield bonds, much longer duration treasuries and stocks. And so that's another place that, stocks are looking attractive. And you can sort of see what the investor appetite is just looking at things like the put call ratio. So historically, you sort of have more puts than calls a lot of the time, but lately there's been a lot more calls than puts, and so that signifies investors mostly positioning for an upward spike in the market, not a downward spike.
And of course, Phil, vaccine progress is also driving stocks. As the sooner we can all get back to normal, the sooner we can return to spending and all these services that we miss so much.
Yeah, and there's some pretty decent news on the vaccine. Obviously, Israel is kind of leading the way in terms of its vaccine progress. And there's some statistics coming out that show that the parts of the population that have been vaccinated are catching COVID much less than the rest of the population that still needs to be vaccinated. So the vaccine's working, which we knew should be the case, but it's great to see that coming through the data. The other thing that's really positive is if you look at South Africa, which has one of those variants that was potentially not going to be as effective with the vaccine. It looks like South Africa's actually managed to crush their curve and get the cases under control pretty significantly. So that doesn't look like the variant is running out of control and likely to respread around the world, which was one of the fears for the market as well. I think the other thing that's really interesting is not all countries are like South Africa either. Some of the variants seem to be pretty benign, and it looks like India, which completely missed this second wave that most of the globe has had, may have had an evolution of a variant that's not that significant because they've had relatively low cases, pretty low death rates. They're ranked fourth in deaths, considering they've got the largest population in the world. That's pretty phenomenal. So obviously India might have had a less virulent strain of coronavirus, which it shows that it can go both ways.
Phil, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.